This is Murray Boyer with Boosted Profits, and I'm shooting this quick video. I'm trying to share this with as many people, many contacts and friends that are business owners as I can, because there's a time-sensitive window here to take advantage of a tax loophole that was created by the tax law changes in the 2017 tax reform. And once this window passes, it's gone. So I want to make sure everyone gets the word on how, and we're talking potentially saving hundreds of thousands of dollars. So don't miss this. So let's get right into it. All right, so the impact of the tax reform, as we know, the primary provision, there's a lot of other things, but the primary provision was to reduce the corporate tax rate from 35 to 21% in 2018 and going forward. So that means income, of course, is taxed at a lower rate, which is good, but the downside of this is that the deductions that you take have less bang for their buck than they used to, because you're only going to get 21% benefit versus 35. So what does that mean? We found a loophole here in the tax law as it relates to a powerful remediation strategy called cost segregation. And I'll try not to get too accounting on you, but keep it at a high level here. So the basic rules of accounting say that all property is valued using a 39-year life. So that means that most companies who don't use cost segregation use standard straight line depreciation. So they take 1/39th of the value of their property every year when they file taxes and write that off as a deduction. That's what most people do. That's the standard way of doing it if you don't use cost segregation. And what they're doing when they do that is they're missing the boat, because cost segregation is a powerful strategy that identifies the components of property that are eligible for accelerated depreciation. What that means is you can take a one-time immediate cash flow the year that you implement cost segregation, and it's a huge cash flow influx, and it can be easily six figures. So this is not something to overlook. You need to consider this. So let's go on. Let's go forward here. And also, I just want to point out that this is completely legal and fully supported by the IRS. The whole intention of cost segregation was a tax law that was passed with the full intention of stimulating the economy, was to incentivize businesses to invest in their plant and building so that we could jumpstart the economy. So this is fully and legally supported by the IRS. So the best industries that qualify for cost segregation: auto dealerships, manufacturing, commercial real estate, hotels, and construction are the big five. But all these other ones: medical facilities, professional services, restaurants, rental property owners, any business that have a large asset of plant and equipment over $750,000 are good candidates. So I just want to give you a potential example scenario here of what a commercial real estate property owner could benefit from doing cost segregation, just to give you a feel for the magnitude we're talking about here. So let's assume a property owner owns a building that's worth $4 million. Based on the 2017 tax rates, I estimated that they could get a one-time savings of 240 to 300K by implementing cost segregation as opposed to the vanilla straight line depreciation that most companies take. All right, depends on some factors like how the building is used. That's why I'm giving a range here. Can't give you specific numbers. It's just an estimate. And even if the building or renovations haven't been done in the 2017, even if the building is 10 years old, you can still do it. It doesn't have to be brand new. All right, so don't let that hold you back. And it can be exercised by a new owner, even if the previous owner has taken credits, cost segregation credits, because the clock starts new when a new owner buys. All right, why doesn't every owner do this if it's so great? All right, why, if you can save hundreds of thousands of dollars, why doesn't everybody do it? Well, most people are not unaware of the program. They're professional tax professionals, or the owners are not aware. They're not aware they qualify, or maybe they don't have the bandwidth to implement. There could be a lot of reasons. One reason is it requires an engineering study to do this analysis, and it's not in the scope of the skill set of a tax professional typically. All right. So as cool as that is, and I want to explain why this is the best time right now. As I'm recording this, February 2018, this is the best time in history to take advantage of this program. So don't overlook this. Okay, so you know that the tax rate uh, drops, 40% tax rate drop in 2018. That also means that the deductions have a 40% reduction in between 2017 and 2018. That means any deductions you take, I'm saying the same thing again in a different way, that in 2018 are 40% less bang for your buck than they were in 2017. So businesses right now are currently preparing taxes based on what they did in 2017. In order to capitalize on this loophole in tax rate changes, you must implement cost segregation into your 2017 tax computation at this higher 35% rate. All right, so you've already seen how powerful this is. And if you wait until 2018 or beyond, you're going to miss out on 40%. All right, and once that happens, it's gone. All right, 2018 and going forward. So the property must be on your books by the end of 2017. And the age, as I said before, the age and date of the property is not a factor, and the clock resets when somebody else buys the property. But just to give you an example, in that sample scenario I spoke of a couple slides ago, the difference in filing a cost segregation study in 2017 versus 2018 is about 100K difference in savings just by the timing. So that's huge. That's not peanuts. So my conclusion is no business should file taxes in 2017 without considering cost segregation. That's very important. Once this window is passed, this opportunity will be gone. So you need to talk to your tax professional ASAP and make sure they're aware of cost segregation and make sure they're aware of this timing thing. And if they've already filed taxes, then you need to file an extension and a correction. Okay, and if your tax professional needs help or if you'd like to talk more about it, we can help. My company has been performing cost segregation studies and other tax remediation strategies for over 17 years. We can estimate the potential savings in less than 13 minutes with a few questions. There's absolutely zero risk to you. We get paid only on a contingency basis, and we only get paid a small amount of the actual savings generated, which in theory you wouldn't have realized if you hadn't engaged us to begin with. So we work hand in hand with your tax professional. So there's full disclosure, there's full transparency. There's nothing going on shaky in the background. This is all legitimate stuff, and we want to work with your tax professional, not displace him. All right? We determine if you qualify for additional tax and cost remediation strategies as well. So there could be more than just cost segregation. So if you're interested in talking, let's get together. I'd love to talk to you. I'm very passionate about this. I really hate when people pay more taxes than they need to. So give me a call at here's my email address. Here's a scheduler. If you'd like to schedule a call, click on this link. I'd love to talk to you and your tax professional about how we can prevent you from saving taxes, and take advantage of this window in time when once it's gone, it's gone. All right, this is Murray Buller with Boosted Profits. I look forward to hearing from you. Thank you for watching.